and now we have the data for the second quarter. So the first half, there was a sequential loss in market share from Q1 to Q2 for Tesla, but make no mistake, it still dominates the U.S. market, just over 71% market share.
The EV maker's AI and Autopilot chief says he's leaving the company.
Talking about a bunch of different things that are pushing on the industry, slowing growth, headwinds from credit. One of the big names that was mentioned in this note was indeed Tesla. But
in this video, Morgan Stanley have cut their Tesla stock price target yet remain bullish on the company. New data shows Tesla is losing market share in the United States. In fact, their share has collapsed to a little over 70% of all new electric vehicles sold. Looks like the competition is finally coming. And a quick note on the departure of Tesla's AI and Autopilot lead, Andrej Karpathy. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment theme merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. Quick look at the stock market today. Tesla going absolutely nowhere, up 0.5%. After hours, up another 0.5%. As I mentioned, however, year to date, Tesla stock's still down 40%, and over the last 1 year, up less than 10%. As I've said a trillion times, actually 1,003,000,000 times I think now, won't age well in my opinion. And yes, still buying with every spare cent and then some. Today the Nasdaq 100 was up 1/3%, Apple stock up 2%, Amazon stock up 0.2%, Alphabet stock down almost 1%, Rivian stock up 0.25%, Lucid stock up over 3%, and the company that produces renderings of real trucks, Nikola Corporation, down 1/3%, the ARK flagship ETF down over 2%. Definitely another mixed bag. And I still cannot believe where Tesla stock is trading as I record this. I do just want to highlight over the 52-week period leading up to this video being recorded, Tesla stock's 52-week low, $620.57. The 52-week high, more than double this amount at $1,243. And it doesn't take a math genius to figure out that we're almost at the 52-week low mark. And now onto Tesla's catastrophic market share losses in the United States.
It's not a huge loss, Andrew. Good morning. But the data that we have collected from Motor Intelligence, which tracks the vehicle sales for every model, for every automaker here in the United States, we got the data after the first quarter, and now we have the data for the second quarter. So the first half, there was a sequential loss in market share from Q1 to Q2 for Tesla, but make no mistake, it still dominates the U.S. market, just over 71% market share.
So just a couple of quick notes here. First of all, I'd just like to publicly congratulate General Motors for leading the way in terms of electrification. As we can see here on the list, in the first half of 2022, Tesla, Hyundai, Ford, VW, other. There must be something wrong with the information here because as we heard from the President of the United States, General Motors led the way and it matters. Yeah, CNBS obviously just don't have the right information here. This obviously can't be right. GM isn't even on the list. I just want to take a moment here to analyze what we're seeing on screen. The United States is Tesla's most mature marketplace. In other words, they've been producing vehicles in the United States for longer than anywhere else. China number 2, and then Europe will be number 3. The fact that in the first half of 2022, not 2012, 2022, Tesla still maintains over 70% market share in the United States for electric vehicle sales is incredible. And I mean incredible in two senses. One, it's incredible what Tesla has pulled off. What's even more incredible to me, how stunningly, how embarrassingly slow other automotive manufacturers are in the United States with their EV plans. Credit where it's due. Hyundai actually low-key slaying it at this point in time, capturing almost 10% market share. However, Ford's 6% share here is pitiful. VW isn't even at 5%, and everyone else combined, less than 10%. So credit to Tesla, but also this really is an indictment of other automotive manufacturers. This is them doing their best to catch up to Tesla. A number of years ago announcing their intent to catch Tesla and then beat Tesla, and this is where we're at so far. This is a joke. Contrast this with China and you'll notice that Tesla's market share is a fraction of these numbers. Why? In China, there's a mature electric vehicle market. And as Sandy Munro and many others have warned, there is a Chinese EV invasion, in fact, a tsunami around the corner. It's not going to be too long before China-based EV makers can produce surplus, have more vehicles than they can sell locally in China, and they'll start shipping to the United States. None of these are Tesla killers, but in the lower price points, affordable, economical, average performance, average features and functionality, average safety, these vehicles are going to be arriving on US shores in no time at all. And then what happens to Ford and government motors? It's not pretty.
Look at Hyundai quietly doing well when it comes to selling EVs, and Ford, you're starting to see the impact of the F-150 Lightning with 6% market share. By the way, these other automakers, you're going to start to see this number increase, and that bottom four is going to fluctuate, especially as GM ramps up its EV market manufacturing. And for Tesla, the models are surging in large part because the Model 3 and the Model Y, the popularity that you're seeing there. But in terms of the different states and where EVs are most popular, I get this question all the time. No surprise here. 34.9% of all the EVs sold in the U.S. are sold in California. Not a surprise given the early adopter status and the fact that Tesla was based there and that it is a population that is more environmentally focused than the rest of the country. Florida and New York, roughly tied. Florida, about 50 more EVs sold than New York. And there you see Texas coming in at 6.5. By the way, Tesla gained market share amongst EVs in Texas. That's the impact of the Gigafactory in Austin. But you'll see the EV manufacturing ramping up between now and 2025. We're already seeing it with the F-150 Lightning. You're going to see a number of the other automakers increasing their manufacturing capacity over the next couple of years. And that's why you're going to see Tesla's market share is going to erode to a certain extent. It's not going to lose its lead or its dominance, really, over the next couple of years, simply because it's so far ahead of the competition.
Nice to hear the facts being acknowledged here. Not only is Tesla not going to lose its market share in the next few years, and spoiler alert, Phil, try in the next few decades. Close enough, though. Notice, however, that Phil LeBeau also elaborated and said not only is Tesla not going to lose their lead in the next few years, they're not going to lose their dominance. His words, not mine, although I have used the word dominate hundreds of times in my previous videos. But this is interesting. The narrative really is shifting. Even the mainstream finance media now starting to admit Tesla is in a dominant position and has a lead of many years. It was only a few years ago, less than 3 years ago in fact, that the mainstream media would say nothing but Tesla's going bankrupt, the competition is coming, they can't make a profit, blah, 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 blah. How times change.
But its EV share has fallen in 29 states. As you take a look at shares of Tesla, keep in mind that it really does dominate in the two states that matter the most right now. The two of the four largest in terms of market share, which is California and then Texas, although EVs relative to California is still a small number in terms of actual numbers of vehicles. And then as you look at the EV manufacturers, we're talking about Rivian, Lucid. We're also going to throw in GM and Ford because they're ramping up their EV manufacturing. They're just not getting any benefit from the potential growth in EVs that we saw a year ago.
So I believe when Phil refers to Rivian, Lucid, etc., not really seeing that same benefit in terms of the excitement around EV growth, he's specifically referring to the stocks of these companies. Phil referring to a year ago, the exact same time that I was pointing out that the bell curve is real and the people, quote unquote, investing in these stocks don't realize they're gambling, don't really realize the intrinsic risks there. The thinking process of many of these dolts, I think, went something like this. Tesla stock's gone up too much. I missed out on the opportunity on Tesla stock because it went up a lot. Therefore, I need to find the next Tesla. Who else makes electric vehicles? Well, nobody, but who else says they're going to make electric vehicles? Oh, Rivian said, Lucid said, Nikola said, Lordstown said, I'm going to buy those stocks because they haven't gone up 10 or 15 times in the last year or two. I'm smart. I just quickly want to discuss the numbers on screen. We're looking at year-to-date performance for stocks, including Rivian, Lucid, GM, and Ford. For context, Tesla stock year-to-date down just over 40%, and Nikola stock year-to-date down almost 50%. As we see on screen, Rivian stock down over 70% year-to-date, Lucid stock down almost 50% year-to-date, GM stock and Ford stock down about 45% year-to-date. Now, if we wind back even further, Rivian stock over the last 1 year, not year-to-date, but over the last 12 months, down 70%. Lucid stock over the last 1 year down a mere 12%. I just want to pick things apart a little bit here. In my opinion, many investors have realized that ramping up volume production of compelling electric vehicles that you can produce profitably, that consumers are desperate to get their hands on, is kind of hard. So it makes sense that these stocks, which were just stratospheric in terms of valuation and made less than 0 cents, have come back a lot. Yet, at the same time, the one company, we just saw the market share in the US alone still over 70%. Tesla has been absolutely slaying it, running circles around the whole industry, embarrassing everyone, selling every vehicle they make, raising prices 20, 30+% over the last 18 or so months. Yet Tesla stock has followed in line with basically every other one of these companies. Does that make sense? In my opinion, no, it doesn't. To be clear, the stock market rarely makes sense. Occasionally it gets close to making sense, but the majority of the time it's all over the place. And those deviations from reality, in my opinion, are huge opportunities. Another way to think about this, just boil things down really simple. Let's just assume that every single stock in the automotive industry, whether it's General Motors, Ford, Toyota, Hyundai, etc., plus all the new EV startups who haven't done shit yet, but tell us they're going to make EVs in the future and they're not going to go bankrupt. If every single one of these companies, their stocks had declined in an equivalent value, which is pretty much what we've seen, the only way that this would make logical sense is if the future prospects for every single one of these companies had not only declined, but done so perfectly in line with each other. Their prospects have declined by an equivalent amount, depending on which company you look at. Now, is that a reasonable and accurate depiction of what's actually going on in the world right now? Remember, Government Motors, GM produced 26 EVs last quarter. Ford produced considerably more. Lucid is struggling with their production, and Rivian are also struggling. Both companies have begun first deliveries, but they're really facing an uphill battle. Meanwhile, Tesla's absolutely slaying it. Yet basically all these stocks have done the exact same thing year to date and over the past 12 months. This is herd mentality. This is groupthink. This is nonsensical. It's embarrassing. And again, in my opinion, opportunity. I gave similar examples when everyone thought the world was ending. March, April, May 2020. Remember that? I sure do. I pointed out at the time, Tesla stock had fallen more, and I want to underscore this, Tesla stock had fallen more than any airline stock in the same period of time. You know, flights grounded globally, Tesla's still producing vehicles and selling every single one of them. Yet Tesla stock performed even worse than airline stocks over that same period of time. And I said, this doesn't make sense. And sure enough, the stock market eventually figured out that I was correct. I just want to point out, exact same shit, different flavor. Don't say I didn't warn you. And next, Morgan Stanley have cut their Tesla stock price target, yet remain very bullish on the company. And by the way, I can never let Morgan Stanley live this one down. If you haven't been following the Tesla story for too long, it was only a few years ago that Morgan Stanley had a $10 price target for Tesla stock in their bear case. And that was pre-split. That's $2 per share, split adjusted. Yes, Morgan Stanley legitimately thought there was a scenario in which Tesla stock could be worth $2 per share. At the time, this was absurd. Even if everything went wrong, Tesla's on the verge of bankruptcy, there would have been many other companies out there willing to acquire Tesla for significantly above this amount. Morgan Stanley is so hard to read. Sometimes they make sense, sometimes their research is fantastic, and other times, I just have no idea what the fuck they are smoking and or thinking.
Tesla, and that's because Morgan Stanley is out with a new note. Adam Jonas over there across the auto coverage, talking about a bunch of different things that are pushing on the industry, slowing growth, headwinds from credit. One of the big names that was mentioned in this note was indeed Tesla, but really he cut price targets on a number of different companies in his coverage universe.
Yeah, Adam Jonas, friend of the show. Always enjoy his notes. I'm on this note. He's still staying an overweight rating on Tesla into earnings. He still thinks Tesla can leverage its cost leadership in EVs to aggressively expand its user base. So more of the same from Jonas, longtime bull in the name.
Yeah, at the same time, we also have an initiation of coverage of Tesla here this morning as well. That coming from Truist and William Stein over there, who interestingly covers semiconductors. And he's got an initiation with a buy rating here this morning for what it's worth. So that's obviously more the consensus view on Tesla, right? That he's got $1,000 price target, for example, and that.
So plenty happening here. New coverage initiated on Tesla stock from Truist with a $1,000 per share price target on Tesla stock. At the same time, Morgan Stanley cutting their Tesla stock base case price target from $1,200 per share to $1,150 per share. It's almost as if Morgan Stanley just want to stay in the headlines. I'm sure they have a valid reason for why their price target is reduced by $50 per share. My suspicion, materials costs, supply chain challenges, blah, blah, blah. But as we've discussed, Tesla still has wait times of 3, 6, 9, 12 plus months for every product. They'll sell every vehicle vehicle they make over the next 12 months and do so extremely profitably because they're proactively increasing prices in line with expected increases in material costs and so on. So in theory, give or take, Tesla should be making as much profit per vehicle sold, which is all of them, every single one they produce, they'll all be sold, as they are today and as they were a year ago. With that in mind, it's hard to understand why price targets would be coming down, other than, oh, the macro environment's scaring us, so we need to reduce our price targets, right? Because everyone else is, right?
AI innovation should turbocharge core EV growth. Those AI innovations that he's highlighting, even as the head of AI at the Autopilot program just announced yesterday that he's no longer with the company.
I'm sure most of you have heard by now. We'll talk more about this in just a moment.
The EV maker's AI and Autopilot chief says he's leaving the company. Ed Ludlow back here with more. Obviously, this is a critical role.
Yes, this is Andrej Karpathy. He's been at Tesla since 2017, but he went on leave in March. And, sources have told me this was a guy that didn't miss a day of work for 5 years. He went on leave. He's tweeted that he's leaving Tesla, in strong, capable hands. Autopilot, the work Tesla's done on AI to power that camera-based technology has really come a long way. But he's doing something new. We just don't know what.
So do we know if this had anything to do with disagreements or a deprioritization of the work that he's doing?
Before Ed responds, I'd just like to share a few of my own thoughts. Given the fact that Andrej Karpathy has been working his fucking face off for the last half decade straight, as we just heard, hasn't taken any time off Tesla until the recent sabbatical, there's a pretty decent chance that the poor man is burnt out. Been there, done that. I literally closed down a successful business in the past just to get enough space to go on my own sabbatical to figure out where to from here. And it wasn't to continue doing what I'd been doing. It just wasn't sustainable. YouTube, however, is. Now let's be clear here, this is a huge loss for Tesla. But Tesla's Autopilot and AI team isn't a one-man show. The fact that anyone within Tesla, especially those in more senior roles, can survive for many years, let alone half a decade or more, is truly stunning. It is a grueling environment. That being said, my suspicion, my hunch here, which is all I've got to go on, my intuition, tells me that Andrej believes he's contributed enough, he's planted the seed, he's got the ball rolling. Autopilot is now a done deal, it's just a matter of time. His contributions were critical along the way, but Andrej's baby has now grown to the point where it's self-sufficient and will survive. And to be clear, I think it's still going to be a few years before we see Tesla robotaxis doing their first paid fares. This has been the case in my Tesla valuation model since day one. Still expecting the very first robotaxi fare to take place somewhere on planet Earth in 2024, likely in the second half of the year. So there's still plenty of work to do, but I believe, given Andrej's background, his capabilities and his understanding, I suspect he's burnt out and he also feels he's done enough to get this thing rolling. It's now time to move on to some other projects. Like I said, it's definitely a big blow, but it's not a showstopper, and Tesla will be just fine.
We don't, but you'll remember last week we reported that Tesla laid off around 230 Autopilot data labelers, as part of the big layoffs program.
Well, as we all know, context really matters. Some of you may be familiar with Tesla's Operation Vacation, a term used by Andrej Karpathy in the past, describing the idea that in the future, Tesla's goal is to get Autopilot, their full self-driving software, their AI, Tesla vision, to a point where a bunch of engineers could fuck off to the beach for a week or two. I think that's a technical term for have a vacation, and the system would actually improve in their absence without them needing to be hands-on. So when we hear a headline like Tesla lays off a few hundred employees in their data labeling organization, you can interpret this as, oh my god, they're going bankrupt, they're forced to lay people off, or this could be interpreted as an extremely bullish signal that Tesla no longer needs these data labelers because they've automated enough of the processes that they can participate in Operation Vacation, aka you're no longer required. Sorry. This will be a recurring theme in the future, especially in Tesla's AI division. Because Tesla's doing pioneering, groundbreaking work in this area, there'll be many opportunities in the future to delete people from the process, to automate, to have algorithms, AI, doing the work that was previously manually done by humans. In fact, let's listen to a really short clip from Andrej a couple of years ago.
And we're noticing that you can involve engineers less and less in that loop through a lot of automation. So I would say it's kind of like a half-joking North Star for the team, where once these neural networks are just getting better by themselves with a lot of people in between, but just data labelers mostly, we get to all go on a vacation and the Autopilot could in principle just improve automatically. If you're just talking about the perception system itself, I think its improvement can be just improved autonomously just on the raw detection itself.
These comments from Andrej back in 2021 provide some interesting context now that he himself has gone on a permanent vacation from Tesla.
They have made progress in this area. They're working on their own chips, their own supercomputer dojo to help the AI, train the neural networks to improve this technology. But he's been on leave. We don't know what's going on behind the scenes. And now he's called time on his Tesla career.
So just another problem for Elon Musk.
Another
apparently.
one, but Elon tweeted he's grateful for the time he had.
This is a great opportunity to express my own gratitude for Andrej Karpathy and his contributions to Tesla. He joined Tesla after I began purchasing Tesla stock and completely changed the direction of the story. And again, it's not just Andrej. The man certainly had a pivotal hand in getting Tesla off to the races and establishing their now unassailable lead, especially with the data engine, the data flywheel, when it comes to solving autonomy. So thank you, Andrej, and all the best in your future endeavors. So a quick recap, Tesla stock going nowhere. The stock market still making very little sense in my opinion. Tesla's market share in the US absolutely collapsing to a pitiful 70+%. That competition sure is coming. Morgan Stanley's still very bullish on Tesla stock with a marginal decrease in their price target. Truist commencing coverage on Tesla stock with a buy rating and a $1,000 price target. And some dickhead on YouTube continues to repeat that he believes that Tesla stock is the best risk-adjusted opportunity in the stock market, at least that he is aware of. And lastly, don't forget to join Patreon with the card in the corner or the link in the pinned comment. You'll gain instant up-to-date access to my Tesla stock price targets, and spoiler alert, new update to my Tesla valuation model dropping in the next few days, which will meaningfully impact my Tesla price targets. And all Patreon supporters also gain access to well over 100 exclusive Q&A videos, loads of other content and exclusive perks. So I'll see you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.